Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday, October 5th. Hope you guys had a great weekend here. Weekend full of football, right? Hey, we got a very light week this week. Today was one of the bigger ones we have, which is the ISM non-manufacturing, or also known as ISM services industry. So this kind of gives an idea as to how the service industry is projecting. And right now, it's not looking as good as we had hoped. We had 59%. Anything above 50 is considered expansion. Anything below is contraction. Back in August, and projected for September is supposed to dip down to 57.5 and actually went below expectations at 56.9. Now, the other major, this week's going to be pretty light news week. We got the Fed book. Fed notes will be on FOMC notes will be on Thursday, along with the weekly jobless claims. Those will be really the only other economic items on the calendar that there'll be of relevance this week. So this week I kind of project things kind of more going sideways or being more political or geopolitical that could potentially affect the markets here. Stock market is up, and as I mentioned with geopolitical, it did taper slightly when I saw the ISM services. But things are going pretty well, and the stock market is doing pretty well in Europe as well as Asia, so it just kind of worked its way over to the U.S. as well. The Dow is up over 180 so far this morning. There was a comment made by Fed member Rosengren over the weekend basically saying that interest rates still are on the table. Now, after the jobs numbers came out on Friday, a lot of people are under the assumption that perhaps the Fed will hold off on raising interest rates going into this year as a result, because they weren't obviously very good. And his comments were that he did see the reports and thought maybe it might be just a blip in the radar, so to speak. That unless this is a continued trend, that he doesn't see why it could not still go up, the interest rates. So perhaps maybe he didn't realize, or maybe he wasn't really factoring in the other 2 months got revised lower. So, you got 3 months with lower job numbers than we accounted for. So I guess we'll have to wait to see what October's numbers will look like, and hopefully then they can make a better decision. But anyways, just want to jump in here. Let's go ahead and take a look here at the bond market. In the bond market, we're up for the day, but we're about 3 basis points where we left off on Friday. So right now, to be honest, we're right about the same pricing. Pricing-wise, there's really not much difference, not enough to make a difference in pricing. So the interest rates are about the same where we left off on Friday. I see we did have a pullback quite a bit. That's going to be a tough ceiling to break. It's been once we've been in this area, we've in the past, this has been a pretty tough one. So this week, with a light week, I kind of see us going more of a sideways pattern or potentially even dropping a little bit. So if you have interest rates and they're not locked, I would be very cautious in this area. So I would say go ahead and float a little bit, but be very quick to pull the trigger just in case, because we got more. This week, I don't see us having much upside going upwards as we do going downwards. Okay? You guys have a wonderful day, and we'll look forward to seeing you guys tomorrow. Thank you. Have a good day. Bye-bye.